Hello, wonderful traders. Dadas here with the Dadas trading system and the next daily summary video. Well, like I said, today I've taken a break from trading, but I was still on Discord. I was still streaming live and talking with anybody who wants to or who wanted to interact with me or with other traders. You are kindly invited. Please join my Discord server. The link is below in the descriptions. And we're going to talk about what happened today and what opportunities there might have been for anybody who was trading my system. I was also working a little bit on my indicators, thinking out some stuff. So you might see right now new lines. The thick lines right here. Those are zero lines from H4. Because like you see, uh, what happened yesterday? Well, basically, I mean today. Yesterday, the DAX index was going up, 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 all the way up, making new record highs, and like we see, went all the way up here. And then on the Asian session, there was uh, a rapid sellout. Somebody just started selling out and it continued down, and you see there is a new resistance zero line right there from that one of those H4s, and then it continued down down down. On the Frankfurt it opened up and did some kind of jumping jacks right here, and then it continued down all the way down, and then it suddenly stopped. So we have a relatively long wick and a sudden retrace back. So the next candle is like an inside bar, Harami bar. That's pretty big, relatively big, and let's say that we didn't see the H4 support lines, right? We didn't, let's say we didn't look at any other time frame, we really wouldn't know what to do here, because basically the price could have gone both directions, especially that after the first initial bullish candle and the bullish zero line right here that formed. Well, it got rejected, it got broken by the next candle, and a new zero line, in this case a bearish zero line formed, and the following three M15 candles obviously defended the resistance. So you know we we could have been thinking of going short right here. I mean, and anybody would have been, well, except for the fact that perhaps the move was relatively long. Yeah, I mean, in the sense that the price change was pretty big, right? So there was like already over 200 pips right there from the high to the low. So that's a very relatively strong move, right? And then all of a sudden the price is stopping, and like you see, it's one, two, three, four, five candles that were inside bars. So basically, the market is consolidating, and we really don't know which direction it's going to go until we can see a good breakout. Yeah, but if we had seen those lines right there, those are just zero lines from the H4, then we see very clearly that those lines are making a strong support right here. Now, if somebody is gonna ask me which support is more important, the M15 one or the H4 one, well, obviously the H4 one is more important than the M15 one. Yeah, it's like we're trading the price action here and now. Yeah, so yeah, that's one thing. But when we see a major support from H4, well, it's we better be careful what's going to happen now. Yeah. So basically, you see that. Okay, let's leave this one here. We can see that this candle right here broke out again. Yeah, it broke out again, and that's where we should be looking for our opportunity for reversal. And then again, we don't know anything until let's because those are elongated here, we can make them the way they're supposed to be without any elongations. uh, yeah, nice. So this is the moment the market opens for a while after a short break, and it's gonna go on for half an hour now. So but you see the spread is already crazy, so we're not trading, absolutely not, never. Okay, so what's gonna be what happened right here? I mean, after the price has already reached somewhere around this level, you know, this H4 zero line is only visible after this 1500 hours line. Yeah, that's when this one is gonna be visible. Anyways, so we see a structure. This structure is I don't know the English name of this structure, but it's something like a teapot or something. I don't know, like a or tea saucer. I mean, this kind of structure, kind of, or perhaps it's even called a cradle, baby cradle. So basically, this kind of structure is a very rare one, but when it happens, it's pretty strong bullish bias. I mean, in this case. So yeah, so that's what happens. Actually, the market will make will almost recovered completely from the whole down movement, right? Almost recovered completely, and who knows, by tomorrow it might even make new highs. So yeah. Anyway, so yeah, that's what happened. And basically, one of my basic rules is that I often break. But you know, one of the major rules of my system is that not to go short at prices like here, yeah, but rather, you know, look for opportunities like a standard pullback, yeah, something like that. Anyways, if any trader goes by the rule, then most likely there is this one time that we gotta take a loss and then turn around and go in the other direction, right? Because there's always this one time when the market changes direction and decides to go in the other direction. Okay, now another thing. I've been thinking a lot, and even on my Polish daily summary of the day, on my Polish summary of the day, I didn't have this yet because I was thinking about my new method of plotting those signals on the Renko bars, and I was forced to rethink the whole situation because after filtering out those signals, I really had very rare signals, and they were not synchronized very well with the M15 chart. So I've decided to and the zero lines. So I've decided to do one thing here and to get rid of those standard signals, and that's why in this indicator here, the Ehlers tuple super smoother filter double, I decided to turn on these options right here. So candle signals, Dada signals, and Dada Renko trade ruler signals, and switch off the Dada Renko 9 signals and the 9 signals alert, because that, after rethinking the whole situation, it didn't work. So in other words, instead of looking at signals per se, we have to start looking at price action, more price action than signals themselves. So I've also decided, because basically we are trading the M15, so now I've got to find this moving average on the Renko chart in such a way that it would fit best, how to put it, M15 trends, right? Because if I use the same thing as here, then, well, perhaps I'm still not thinking about it in the right way. I don't know. We'll see. We'll see. Anyways, with this new way of showing price, let's see what we can do with that. So let's look at the day, and look at the day, let's say from the Frankfurt opening hour, and then see what we can do with it from this perspective and the zero lines. So basically, what happened? If looking at the chart from the timeline of 900 hours, which means 9 o'clock in the morning UTC, 8 o'clock in the morning and 9 o'clock in that's another standard. I forgot what the standard was. PET, I think, ET. Anyways, so that's like UTC plus 3, something like that, yeah, or plus 2 maybe. Never mind. So anyway, this is where by the broker's time the Frankfurt stock exchange opens, and that's when yeah, in Germany, and this is the German index, right? So basically, what we could see there is that the price was going down and finding new resistance levels, not really obeying much supports. Only one time, a little bit of a retrace, which was pretty much between zero lines, because we see there is an M15 zero line there and one there, and then it continued. So in other words, there was one candle, there was a trend candle here, and there was some kind of a trend here that lasted for 1.5 hours, a trend there, and then I think, or 1 hour 15 minutes, yeah, 1 2 3 4 5, yeah, 1 hour 15 minutes, and then we had an inside consolidation, another inside consolidation, an attempt to break out, right? Comeback, another comeback, but they are all kind of inside bars that are not really, not trend candles, right? Not trend candles. They are all of these candles are of let's say, generally speaking, of a doji character, or a churning candle character. That means a consolidation character, not a trend character. So the first trend character candle is right there. This is the first trend character candle that we can even call a trend momentum candle. So we can call it a trend momentum candle. Plus we have the zero line here that's been respected, right? So it's kind of like a breakout from the zero line. So now we know that the zero line, actually we see three zero lines overlapping each other right here. But okay, so they've been all broken down. Yeah. So this is the first place where we can start searching for a short trade. Plus, we see that here the take profit line is basically in line with the historical H4 zero line, yeah, which could potentially be the support. So we need to go to our Renko chart and start looking from 1045, right? Start looking from 1045. So we go there, we find 1045. This should be somewhere around here. Yep, this is 1045. Yeah, so we got 1045 right there. We got those three zero lines from M15 plotted right here, and we've got this situation. So again, 1045 to be exact. Yeah, so from 1045, so from this moment, I mean, but from this candle right here, we need to look for a potential short, right? Now, this is pretty easy right now because we see that we got those three candles right there. So basically, except for the stop loss level, because the stop loss level is not in the right place right here, it should be higher, should be on that, at least on that blue line right there, on the dotted blue line right there, at least, yep, because that's the BO line, so breakouts. In other words, if the price would have gone the other direction, it would have gone most probably the other direction. So yeah, so now we see that all the parameters of the trade are correct because our take profit comes up on the gray line that had been measured on the M15, right? And our entry lines are everywhere, are exactly in line with this measurement on the M15. So then now we would have this ETP SSF, right? Let's say generally the moving average here, and we can now observe the price action, what the market is doing, if it wants to go up or if it wants to go down. And then yeah, I mean, we are getting some breaks of this line. That's why we're getting those green signals here, because but all of them are rejected and then continued into short. So that would be a good incentive to get in a short trade. And then of course, either by trailing stops or by patience, we would have gotten our either our trade, whatever it would be, or our take profit ultimately right there. So this one would have been a good one, and it looks much better right now in the context of these like say not real signals but just more like price action signals, right? Okay, so that would have been that one. Now we would have been here already by this on this candle, right? Like you would ask, okay, but if we were late for this price action, could we take another trade? Like let's say after this zero line here was respected. Well, sure, we could have done something like this, and we could have then looked at looked at this time at 11:30, right? Starting from 11:30, but then again we have to take into the consideration this possible support here. Okay, but let's look at 11:30 right now. So if we find 11:30 right now, 11:30 is somewhere around here. Yep, exactly here. So it's right there. So we have 11:30. We have a good trend. We have a nice red. We have nice red candles right there. So yeah, that would have been a pretty. And yeah, and the take profit is fits perfectly inside, right? The measurement from M15. Perfect conditions. Perfect conditions and a very quick trade as well. Okay, this one would have been a good one too. What next? Well, we would have been already here. So if we had taken this one, we would have been already. Ah, let's go back. Okay, now I can turn that off, so it's not gonna jump anymore. Okay, it's gonna jump like this. So we would have been right there already. So at this moment we don't have really anything going anymore because uh, even if we had clicked here, then this one was too fast. I mean, it didn't retrace into our cell zone, so we would have never been able to get that one. So that one was a runaway. That one was a runaway. That's it. Now we have to take into consideration our support lines, right? From H4. Or in the worst scenario, if we fail to do that, take a loss, yeah, on a short. But if we waited it out until we saw this one, yeah, then we could have been trying to get in on this one, but this it's doubtful because the retrace here was very small, so basically there wouldn't be any possibility. But then we could have tried on this on the next candle. So we would have been looking for an entry on 1400 hours. So that would have been a possible entry on 1400 hours. That's somewhere around here. Here is 1400 hours. And then we wouldn't have an entry because we would have to be here earlier. In other words, we would have to already be here somewhere at 1330 hours. So yeah, when we saw the break of those zero lines, and then then we can't do this. We would have to stick to this. That wouldn't work really, I think. Mm, yeah, that wouldn't work either. We wouldn't have any M15 measurement that would be good right here. So the only thing we could have done, I mean, basically, uh, there is a way to do it, but it's maybe I don't know if it's risky. Maybe it's risky. But then we have to look at the trend line and do something like this, and look at what's happening if the price is going trending up. In other words, in breaking the this resistance, and then on the retest here, we would we had a small opportunity right there on the retest to get into the trade, and then that would have been a good quick trade make some money, but that requires other skills than just looking at this would be like this, like going with this one, with this green zero line and this red zero line, because yeah, this green line wasn't there yet. I guess it would have been there somewhere at some 15 minutes right there. So basically that's it. I mean, we would have to look at it this way: a signal, yeah, a buy signal, an arrow right there. That's a buy signal. Then we have a strong impulse up. That's the zero line, and basically this zero line is kind of, first price is oscillating around it, right? But we see more and more bullish. Then we see another attempt to go down, and then we see another impulse going up. And by this impulse, we would have to then catch a good opportunity to go long, especially when there is no more short, yeah, any short, any red candles there. Yeah, so that's thinking by the price action way. Okay, so that would have been that, but then the next opportunity that could have arisen here was this candle that broke the H4 zero line here, and then we would have to observe the price action right there, right? So in other words, we have to start looking at 1415 hours. Yeah, 1415 hours. So for 1415, 1415 is right there, somewhere around there. Okay, somewhere around there. So basically, we have this, right, which fits perfectly into the conditions of the M15, and the only problem would be a little bit with this moving average, but the slope of the moving average is still up. So we, on this here on the price action one, either here, yeah, when it bounces off, probably I would have gotten in the trade right there on the bounce from this line, and I would have been in a trade here. Here I would have been a little bit, afraid, perhaps, because the price was getting close to the stop loss. But anyways, okay. But then it didn't hit the stop loss, so it continued up. And right here, it was a very quick move, so there would have been a take profit there. So that trade would have worked out most probably, because that was the opportunity. But then the next opportunity, like I say, now we're getting, you see, we're getting even this one was an opportunity. If we had waited out this one and this one, then we had a little bit, a little wider here, and the price was broken up, yeah, definitely broken up again, because this one was broken down, this was broken up again, and then we have to look at 1445. So 1445 is right. So I have to look at 1445, 1445, 1445. This is 44, somewhere around here. So basically 1445, we would have to go from this level more or less, yeah. Now this is the danger right there, because yeah, I mean the price is going back. So basically, it's not really a danger. It's a danger when somebody is entering when the price is moving in the opposite direction, instead of entering when the price is moving in the direction. So that's another thing that people make a mistake, often mistake, because if you're going, if you're entering the trade when the price is moving here and now in the opposite direction, then you don't really know if it's going to turn around or not, right? It's more likely that the price will continue up at least a bit if it is already going up. So like one or two candles already going up, or showing some kind of you know like a bounce of some moving average, or some level like a zero line, because there's a zero line underneath that, right? So it's a good idea to get into the trade. And you see, this one would have been very quick and very nice, and everything was fitting right there. Okay, so that's it. What that's we're here. Then of course this is a long one, so we're already gone. But again, at one point, so at exactly this timeline, the new support level from H4 has appeared. So then we have the break, and that was the break. We saw the break right there, and then we can do this, right? So we can do this, and then we can start looking for an opportunity to go long, starting at 15.15. So 15.15, let's find 15.15. So it's around here. So it's 15.15. So we have to find the conditions. The conditions are right there, right? Conditions are right there. And then we have to observe price action and get into the trade when there's a good opportunity. So basically like a bounce of the moving average or something like that, if the market gives us a good opportunity to get in, then we get in. In this case, in this scenario, the stop loss is safe, and again there was a good move, good quick move. That okay, it's not reaching our take profit line, but like I always say, this take profit line is not exactly what the expert advisor sees. It calculates the stop loss. Shit, it calculates both the stop loss and the take profit, but then the take profit would be probably somewhere a little bit lower than it would have been. There would have been enough room to trail the stop loss and take the profit at that level. And then you see that, yeah. So that's that one. So basically, we need to go back then and look at what's happening next. So basically, that would have been somewhere on this move. So basically, we have another. Well, this candle is more like a trend candle than actually a churning candle, because even though, oh, it might look to some people like a churning candle, but the body of this candle is relatively bigger than the ones before. So it's not actually a churning candle. It's more like a trend candle, only with longer wicks. So we could try to look for something in this context, right? Then again, that would be like 1600 hours, right? Yeah, 1600 hours. So we look at 1600 hours, what's happening if we can get a trade at 1600 hours. This is 1600 hours. So starting at 1600 hours, we are not sure yet. All we can do is this, right? So yeah, let's okay. Well, all we can do is this. So here are the conditions, right? Here are the conditions. The take profit is well inside, yeah. This the measurement, because that's the measurement from the M15, and this is the measurement from the Renko, and then we either we risk the trade here or not, because yeah, basically still the moving average, the slope of the moving average is upwards, not downwards. So we might only try to get some, you know, might feel a bit strange right here. Yeah, we don't know, something maybe not right. Anyways, if we had gotten into in this trade, if the market gave us an opportunity and we had gotten in this trade, so basically most probably after this candle right here and on this price action movement, yeah, because yeah, that's more risky, yeah, because the price is not moving in a direction. Basically, the price is moving in the direction right here, because there are like two candles moving already in the direction. So, but the problem is that then the third candle doesn't give us any opportunity to get into the trade. So basically, um, this this could have gone two ways. Either we would have gotten into the trade, or we wouldn't have gotten the trade. In both cases, we wouldn't have lost, which is important. The it's not as much important to make profit as it is not to lose anything, right? So the basic incentive is not to lose. And then, of course, when the market went up there, we have a new zero line. And like I say, we wait at least the next 15 minutes, and the next 15 minutes is rejecting the zero line and making a new zero line. So basically, it's giving us a suggestion of looking for a short trade. Well, we could look at this in two ways. I mean, one way, because you see there's another red zero line right there. So basically, uh, if we had waited another 15 minutes after this one, then we have a buy signal, and the buy signal is off the H4 support. So that tells us that we shouldn't be looking for a short trade actually there. Even though, you know, looking at it from this perspective, we could have taken a short and we maybe could have even made some money. But it would be wiser to wait out those 15 minutes, and after seeing a buy signal of H4 support, well, I mean, then you have to just wait for a breakout, because yeah, let's say we don't know, right? We don't know. We've got already 1 2 3 lines over here, and then after this one we get another line, four zero lines in one bundle. Well, that's not good. We have to wait for something. So then this is the price action, and you know, we already have a trend here, a trend building, and we have this price action. So now we can look for a long right there at 1800 hours. So we go over there. We find 1800 hours. It's not yet here. It's right there. 1800 hours, right there. Right there is 1800 hours. So if this is 1800 hours, then our trade measurement comes up from here. Basically, it's a bit too high, but I mean, not so bad, right? It's not inside this line, but well enough, I would say. We could do this little trick that, go a bit, move the stop loss a bit higher so that our take profit matches even almost perfectly like this. And then again, this is a good situation because we have a defined trend right here. Yeah, we have a nicely defined trend with all the trend lines where they're supposed to be. There is a bounce here, right? There's a bounce of this zero line, of a green zero line that goes over here. So we got to get in. This would have been the perfect situation where we could get in a trade on the next candle. Yeah, I'm not sure if this red one would have been visible already. Well, probably it would have been already visible. That if it were visible already, then that's another incentive because it tells us that the price has broken this red one and now it's defending here. So we have enough room to enter, and then there's a quick trade. Yeah. So this is a good one. Let's go back. Okay, let's go back, and then we are already over there. So that's about it. Uh, Here we don't have much room. Well, if somebody was looking at this one after this 15 minutes, when there is a zero line there, well, basically you see these ellipses levels are also sometimes very, very good levels. So especially if the market is not moving too much, then I wouldn't suggest going long on this one. Basically because of two things: because of the time already, and because of the price that is at some very high level. And you can also look back right there that there is a bundle of zero lines from M15 at this level. So this bundle of zero lines, and the price is very close to the H4 resistance. So basically it didn't reach this, it didn't touch this resistance yet, but it turned around over there. So that wouldn't be a good place to enter, even though there might have been like even maybe 10 pips there or something. I don't know, but yeah. But my thinking at this level is to be careful. And then we see there is a turnaround there, so there's like there's a break of this green zero line with another zero line. So either we tried, I mean, yeah, there is like about 10 pips over there. We could then start looking at this hour. So this is the 1945. So we start looking at 1945 if there is any opportunity there. Let's look at 1945. Let's find it. 1944, 1947. So 1944, 1947. So basically, the only way we could have entered here is by the measurement. The measurement is practically, well, almost impossible to make. The only one the only feasible one is this one here. And again, if we look at 1945, so that's this candle 44. So there was a chance of getting into the trade right on this wick here. So when the price was jumping around there, and that was like the last opportunity to get into this trade. And you see, we weren't by the moving average. We were not yet we were under this yellow line, right? But not yet in a trend. So basically, there was a there was a possible trade, but a more risky one. But nevertheless, it was successful there. So okay, and that's about it. I don't think there was any other opportunity to get here. I mean, yeah, like you see, there was a green line here, green support line here. There were some red resistance lines there, but that's that's pretty tight because that's like on like, well, yeah, let's say 13 pips, 12 pips maximum. So in order to get in there, like under, like after the scandal, not before, but after the scandal, and there is practically no chance to get in there, even though, looking from this perspective, there is 10 pips and it's made there. And then let's see, that's 22.15. That's 22.15. Let's see at 22.15. 22.15. So it's like here. No, and we don't get anything because we gotta go from this. We gotta go from this, and this gives us like the take profit is almost twice as big as the one measured, so we have to lower the stop loss in this case. Yeah, now it's about 10, 11, and then maybe, on this price action here we are under the moving averages. So yeah, it's possible to make this decision and make this trade, which would have been successful. It's not so bad because we are under the no, just there was 22 somewhere somewhere around here. I don't know what was the time again. The time is 22:15. 22:15. So looking at it from 22:15, well, it doesn't look so bad. I mean, it kind of shows us that the price is in some kind of this consolidation up and down, but respecting the support up there. Sorry, the resistance. Respecting the resistance up there, so that would have been quite a feasible trade. Would have been a nice trade. Okay. So yeah, and that's it. That's it. That's the whole day. So basically, I mean, we don't have to take all the opportunities. I mean, nobody expects anybody to take all the opportunities the market creates. We could have taken 1, 2, 3 good opportunities, the ones that were better. Basically, that's the way to do it, and that's what the whole thing is about. Yeah. So that's it. Let's wait until tomorrow. Let's see what happens tomorrow. Maybe I'm gonna trade, maybe not. I'll see what happens. I'm ready and prepared to start a new trading, let's say, adventure. Yeah. So yeah, I think that's all for today. Thank you for listening. Please, like I said, please like my YouTube channel. Please subscribe to my YouTube channel. Please join my Discord server because I need people there. There aren't any English speaking people. I need traders, English speaking traders from all over the world. Come on, join me on my Discord server. Then I'll be talking. I'll be making sessions. Talking to talking in English and or talking in Polish sometimes. A little bit in Polish, a little bit in English. Depends on who's listening. And yeah, become my patron, please, if you subscribe and become my patron. Then you're gonna get access to special materials on my Discord server. Yeah. So yeah, that's all for today. See you tomorrow. Bye.